Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Thursday, the 6th of July, 2023, just getting on to 5:30 p.m. Central Time. So today we saw a report that you don't pay a lot of attention to normally, and it was the ADP jobs report. And they were looking for 200 and some odd thousand jobs. They came in just shy of 500,000. The market took one look at it and it went into a nosedive in market after market after market. And the reason is for the past couple of months, if you've looked at this report, ADP has been, if anything, a little higher than the jobs in some of these cases. Are you telling me you're going to beat that number and come in at 500,000 for the jobs report? It spooked the heck out of people, and you saw that. The JOLTS number came in respectable. It's not weakening that much. I consider 9.8 million jobs versus the 100, what they have, 10 million and a fraction jobs, 10,100,000. So you had a drop. It's not super material, but it's going in the right direction. We still see on ADP that wages are going up. So that's interesting too. And now what do you do tomorrow? Well, let me tell you what I think you do. I think you play it very cautious. You let the report come out, get the reaction in the market. You don't stand in front of, as you hear me so often teach you here, a freight train that you've decided you can jump so quick you can get out of that. If you tried to jump out of the ADP report today, I watched the market, you didn't do very well. It just was a vacuum in the market when that came out. And again, out of nowhere, but another piece of jobs data. So you can see the stock market bounced a little at the end of the day, still closed big negative on the day, giving back a little. Metal market sort of just sitting here, not going anywhere. The dollar was down 16 points, even with, and this I found interesting, the idea that the Fed is going to go up. You know, all you need to do tomorrow, in my opinion, is see more job growth than they're looking for. They're looking for 225,000 and 240,000 jobs. If they go up with a 3, for example, how's the Fed get away from not going up on the interest rate? I don't see how it's possible. Could there be a surprise decline? I don't see it. How do they differ that much from ADP? So that's got me thinking no. Interest rates soared today too. So when we take a look at the gold market, the one thing it's done is it has stayed under right here, this 18-day average of closes. That keeps the market in a downside bias. When you look at the price action, I give the gold credit today. And you'll say, why? Well, let's step back and take a look at the action. It didn't go on all this bad news for the 1900 level. It held above it. So a big shake, piece of bear news that in theory means interest rates higher, a headwind for this market, didn't drive it to new lows. That was, to me, a sign that maybe we're getting to the end of this decline in the gold. You still have the pattern of lower highs, lower lows, which is bearish. The market has stayed under the 18-day average, and ever since you had the crossover where the 18 got under the green line, the 100, the market has acted in the bear mode. If you take a look at these lows, you can see where the 200-day average is at 1900. Well, when you look at the Bollinger Band, this answered why it was finding support. I don't know why it didn't make a run for that today, but that is where the next layers of support are. Let's call it the 1900 level, and you're oversold. This could be why the market's not picking up momentum to the downside. It's one thing to push a market when you're not oversold, or you embed where you get the slow stochastics going sideways under 20. You don't have that. So I think that when you build models to trade, you back away. You tell the model, nah, maybe we don't go as heavy or we don't go in when you're oversold. That's what I think's going on. Now you're wish-washing back and forth suddenly at the 18-day average in the silver. Yesterday, if you take a look, you got under the 18-day average. Today you got back over it. Which way? The first challenge of it normally produces an area where the market fights a battle. Think about this. You were down, you came up to the number, you fought, and then when you got over it, you stayed that way. You were above it, you came back to it, you fought a little battle. So this is well within the norm of silver trying to figure out, was that just a correction, or am I going to get back under the low of yesterday and start saying silver is stronger than gold? The silver is still very much caught in the battleground of the 200-day average in gray. When they got together back here, it proved too much for the market to keep going down. But ever since then, you've gone literally nowhere. The whole rally up culminated in getting to what I call the line in the sand, the 18-day average in red, which is often where a market decides what's it going to do next. Here too, are we in oversold? Yes. Any reading under 30, which you have a 29 there, is an oversold market. I think the pros are probably standing back and saying to themselves, let's just see what we get tomorrow. In the copper, you're in a downtrend, lower highs, lower lows. You have something of sideways action in the black Bollinger Bands, the abbreviated lines you see right here, and momentum is oversold. There's a common theme here. Now, something happened and they created a trap today called a bull trap in the market. Let me show it to you. Yesterday, you lost the embedded reading with the close at 2161. That is normally where I tell, get a reading over 21, come out of the market. Today, the market goes back, and with this news today, it's back into the zone where it's back to embedded. So until it loses it, the guys that bought yesterday had to bail. And now you've opened the door to go back to the 880 level unless you lose that reading again. So we're getting that waffling type action, as I call it. Last, in the dollar index, you can see that you're up to the upper Bollinger Band, and that's right where the market failed. If you don't understand what I'm talking about on these Bollinger Bands, got to go to our website under the word education, IraEpstein.com, under education, and take a look at the Bollinger Band course there. You will learn something from it, I think. Now, tomorrow, end of the Independence Day sale. So this is your last shot for new and returning members. So if you're not with us anymore and you want to come back in, you pick the package you want. You can get the morning subscriber video. You can get the combo of that with the ETF video. You can get the full subscription package and then take the ETF in addition to it. You mix and match. You decide if you want it 30 days or 1 year. We'll honor either one for you. All you need to do is go to IraEpstein.com and go under the word research, or move your cursor to the top up here. You'll see an icon. Give it a click, sign up. It's going to be pulled tomorrow, not waiting for the end of the day. So you do yourself a favor. If you want this, do it now. Don't wait. I'm Ira. You have a good day.